What's up, everyone? What's up? So, I'm doing a live with Dan, the real estate man, and he's about to come in here and interview me. He got some limitations on his account, so I got to start it, and he's coming in here. So, what's up, y'all? We're about to do a whole interview about our private equity fund. I'm assuming that's what he's going to ask us questions about. What's up, the business bully? What's up, Dan? All right. What's my business? I run a private equity fund. We invest in apartment buildings and assisted living facilities. And let me see how I can get Dan in here. No, I don't know how to do this. Don't you gotta request me? Oh, here we go. Right. Here we go. Accept. Here we go. What's up?
Oh, what's going on?
Nothing, everything, all the things.
Absolutely.
Well, what's
Yeah.
going on with you? How you doing?
I am living the dream. I'm blessed, healthy, family's healthy and good. So
Good, good. I loved it. That's all that matters.
that is ultimately, that is what matters. So what are you up to?
What am I up to?
Yeah, I know that's a loaded question, right? I know
What
that.
am I up to?
I know that's a loaded question.
Yeah, no, it's a loaded question. We are running our private equity fund, Invictus Elite Capital. Um, I don't, you gotta, I don't want to just give a whole bunch of stuff because
I
then I'll
got you.
overload
I
you.
got you. I mean, that was just generally about yourself, not about business. But good. Listen, so as some people might know, I started Money Mondays. So Money Mondays was an idea that I had that just through my career in real estate, I've learned so much about money and business, and things that I wish I would have known growing up. So I wanted to the idea for this interview and kind of for this segment was to introduce people to ideas that I thought was dope, people that I thought was dope that were doing things that they may not know about, right? Because I've just learned so much about financing and structuring deals and a whole bunch of things. And so I said, you know what? Instead of people having to struggle and figure it all out, I would bring on people that have the expertise and they could share some of that information with my audience. Unfortunately, my page got hacked and somebody took my page and I tried to get it back. I could not get it back. So I'm starting from ground zero all over again. So I really appreciate you going live and introducing me to your folks. So if they're not following me, please go ahead and follow me so I can kind of get that going again. So um, anyway, you and I think I met you back, maybe 2017 or 16, when you were running BTS, and you asked me to come speak to your group very early on in my presentation days. So I really appreciate you asking me to come on and giving me a chance to shine, which you've done with a lot of investors, both locally and nationally. You've really given folks a platform to share their expertise. So personally, I appreciate that. I thought you were a really dope person. Like, you didn't ask for anything. You just was like, hey, just come share with my folks and whatever. So I've always respected what you've done. A lot of the events and things that you've put on. One of the things that I have noticed, and I'd love for you to kind of talk about that, is one of the things that I've spoken about, is you've done some pivoting in the last couple of years that I've noticed. And so I'd love to hear about why you decided to pivot, and ultimately where you're pivoting to now, which I understand is that you have a fund, and that you're doing some, larger projects. You're doing it with some other folks that I know, Noel and I believe Arthur. Is that correct? All right.
Mm-hmm.
So if you want to tell us just, a little bit about that, because I'm sure most of these folks on here know you. If you want to talk a little bit about your background, but ultimately I'm curious just myself about the pivot and what brought you from what you were doing into what you're doing currently.
So, all right, first of all,
Mhm.
this app is acting really, really weird. So if I hop out, I'll hop right back in. It's already tried to kick me out. This app is weird. But anyways, what's up, y'all? I'm Nicole Purvy. I am a real estate investor turned private equity fund manager. Um, I have been doing this for a very, very long time. And about a year ago, me and two of my best friends in the whole entire world decided to start a fund, a private equity fund. Went from single family investor buying one or four units, and now we invest in apartment buildings, 80 to 120 units, and assisted living facilities. Everything is geared around adding mental wellness amenities to our assets. We'll talk a little bit about that in just a minute and why we're doing that and how that creates a unique opportunity for our investors and anyone who wants to grow their capital in a very untapped, untapped, unique, aggressive opportunity that no one's doing it the way that we're doing it right now, and it's providing a great opportunity for people to invest their capital and while also giving back too and helping people. So why I decided to pivot, I really started feeling the need to pivot a couple of years ago. I have a really strong intuition as it pertains to just business just in general, but some of the writing went on the wall right before right before the Fed started raising rates. Just to give some context, I used to be in finance. I was a institutional bond trader, and I worked on a desk, very much so on a desk during the 2008 crash. And so I've been through some cycles before in finance. And so when COVID happened and the government started pumping money in the economy, actually when COVID first happened, I already knew what was going to happen. Because even before COVID, I told everybody, and if you're a member, I see a couple of our BTS members on here now. I told everybody that the door the barrier to entry into real estate investing has never been as low as it's been in human history. Um, and the window is going to close. And I'm not saying that people ain't gonna be able to get into investing, but that barrier to entry is going to raise. And that's a whole nother conversation of why the barrier to entry into real estate investing has to remain relatively high. And by barrier, what do I mean by that? I mean that access to capital was easy, interest rates were low, there were high margins on burring, flipping, wholesaling. This doesn't exist anymore. And so once COVID happened, I knew that that was like the perfect stage to set up to where zone that barrier to entry will be raised. And so I tried to get on my high horse and tell everybody that it was going to get more and more difficult to invest in real estate and make money. And I'm gonna start acting crazy. And so at the time I stopped, so like around 2022, I stopped because I was a very aggressive buying. I stopped buying. And I'm glad that I did when I did. I'm not saying that people should have stopped buying, but I'm glad because the margins thinned out. And at that time, I didn't really feel I also slowed down on my marketing in terms of getting people to invest and trying to get people to invest in real estate and join my community because I didn't feel that it was as easy, dummy proof to invest at that in this season as it was back then. And I think my whole mission at that time was like, hey, it is really easy. You can't mess up.
Mm-hmm.
And so now that it's not that easy, that is not the hill that I'm willing to die on, because there are other opportunities that are easier and more lucrative in different ways. And I'm not saying we're nixing real estate out, but what I'm saying is when things change, you have to adjust your investing strategy. And so right now, things have changed so that if you decide you want to be a LP, that's the new gag right now versus just doing single families. Like
And
that's the new
just
thing.
and just for everybody who may
I'm
not
gonna
know,
explain what it means in a minute, right? So the same way that all these things lined up to where as though people can invest in single families and not lose, and you don't have to know everything. You can do it and not lose. The same way that that has lined up for people to be limited partners on alternative investing deals. Specifically, in my opinion, apartment buildings, but just in general, really any alternative investing vehicle where the underlying asset is relatively innovative and safer. So a couple of things have happened. There have been a lot of legislation and change that has happened to where though everyday investors can get access to investments that were not necessarily open to regular everyday people, where 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 you can get crazy returns, where in the past this stuff was only reserved for the ultra wealthy, right? So there have been some legislation that has changed that gives people access to this stuff. What happened in the first wave of it is people were getting access, but they weren't getting the proper education to learn how to be a LP, right? To get access to some of these sexier vehicles. And so people were investing in really risky things without fully understanding finance. I think people got smacked in the face by by the reality of some of the people who other people may have called them scammers or whatever it is that they call them. But the reality is you need to educate yourself in finance. So I think it's caused people to take a step back and say, okay, I need to educate myself in finance. That's the first thing that's lined up. The second thing that's lined up is with the affordability of single families being so out of reach, interest rates being so high still, even with the drops that we had, and people just their lives being so busy, it's caused the cost of a single family investment to go high while labor is still high. So what happens is labor and materials are high. So what happens is people are moving into more and more apartment buildings. The beautiful thing about apartment buildings is the value is not determined by what someone's house sold for next door, is determined by the NOI.
mm-hmm.
So it's less sensitive to what's happening with this wild economy that we have right now. So this is creating a new opportunity for investors, limited partners and general partners, people who put deals together and people who just want to really earn money, earn return on their money, to take advantage of this relatively low barrier to entry to apartment investing through limited partnership, as well as just the mere fact that people are moving into apartment buildings. They're moving more into these community style living because they can't afford homes. It's becoming less and less affordable. Right now they have this thing where they're calling it geriatric and home buyers, because the average age of a home buyer is now like 40 plus, whereas in the past it was like 25. So now home buyers are geriatrics because they can't afford it, and people don't want to deal with the roof is leaking. I don't want to deal with that anymore.
Mm-hmm.
Also, too, I think a lot of people got into single families. There's a conversation that I had with actually Noelle early in the game, where I early in the game of our apartment investing, when I really started to see like my best bet to build my wealth is not by acquiring more and more single families, we had this conversation about what's the break even point for you to hire an in-house property manager, because that's really the only way you can do this, right? Like, and really not lose your mind. The
Mhm.
break even point, he says, is 37 units. It's more like 50 units. So
Mhm.
there is this really messy area from 1 to 50 units where
It
you're
is.
going to want to pull your hair out.
It is. That was
So
like that was my path. I self managed till I had about by self managed I mean by myself. I had about 35 units. Literally like 36. It was too much, and I had to bring somebody on.
so he says 37. I say 50, but that's crazy. That's crazy that the number is almost spot on for you.
Mhm.
But even no matter what you want to do, you can't do it before then. It's not affordable, right? And
Mhm.
so the other thing about investing in multifamilies and being a limited partner, you can skip over that messy middle from 0 to 37 units, whatever it is. And there's opportunities and ways you can do it and really earn the same return on your money by being a limited partner as you can by buying 1, 2, 3, 4, 5, 6, 7 units. If people can get out of their ego about, I always tell people, like, when you see people that invest in real estate and continue to put themselves in these losing positions by buying 1, 2, and then pulling their hair out for $200-300 a month, they're not doing it to build wealth. They're doing it because they want that Instagram picture at the closing table.
Mhm.
Till people can get out of their egos about
Mhm.
that, then
Mhm.
they will see that and educate themselves. They will see
Mhm.
that you can make more money being a limited partner on our deal.
Mhm.
We are raising capital. Uh, you can make more money being a limited partner than you can by getting those Instagram pictures. If you want, you can come to our closing table. I don't care. Like,
So one of the things that I'm hearing ultimately, you've said a lot of things here that I want to circle back to, but it's a change in conversation. You've been doing this for about as long as I have, and there was a period where the conversation was basically the only way to wealth, the only way you're going to get there is if you own rental properties on your own.
that was
That
never the conversation. I never said only way. It was
No,
just
no,
a
no, no, no,
loophole.
no, no. I'm saying on social media, the way that it was pitched to regular people was
Not
that,
me.
no, I'm not saying you. I'm
Okay, okay,
saying
okay, okay, okay,
on
okay.
social media, generally speaking, that the way towards wealth, the way you get out of the rat race is to own rental properties. That was the dominant, preeminent messaging. There was very little messaging about, hey, you can also invest in projects. You would hear that, but not nearly as much, right? And I was a part of it. A lot of people were, because you're right. It made sense, right? But it also would give the idea that that was the only path. And in my opinion, what it did was leave out a whole section of would-be investors, which are people that that are professionals in their field. Yeah, they have no intentions of stop being an accountant or a doctor or a dentist, right? Like, why would you? Because you make a ton of money there. But they also don't want the headache of having rentals and dealing with tenants and toilets and all that kind of stuff. And we all know that property management companies come with their own set of issues, even if you're not self-managing. So to me, it's like the conversation itself there changed a little bit with what you're talking about. Like, hey, there's this other option, and we also have these variables that are now changing with interest rates and prices of properties and labor and all of that kind of stuff. So it was a bunch of different factors to me that kind of pushed you into this new opportunity. At least that's what
See, here's
I'm
the
saying.
thing. For me, like I always knew that this was going to be what I was going to do. I just didn't bother myself with the details of how I was going to do it. Like I came from this space, right?
Mhm.
Like So I always knew, I just didn't know how I was going to end up getting there. So I'm saying all this to say that I always came into real estate not thinking that real estate was my be all end all. It was just always an investment vehicle of the time that I knew at that time presented a unique opportunity. And the
Mm-hmm.
hill that I was willing to die on, hey guys, is money over here. You have to literally be to lose.
Mm-hmm.
It's not going to stay like this for long.
Mm-hmm.
It's just not. One day, not too long ago, one of my mentors, I heard him say, he said it so casually. If you invest in real estate with the only expectation of appreciation, then you are speculating.
Yeah, absolutely.
Right. And so that's almost everybody and all the gurus. That's
Mm-hmm.
what they're saying. Hey, buy this property and your tenant will pay off your mortgage and you just hold on to it. Yeah, you're speculating that the value is going to continue to go up. You're just assuming that.
Mm-hmm.
And I'm not saying that you can speculate. That happens. But we
Mm-hmm.
gotta call a spade a spade.
Yeah,
Right?
for
And
sure.
so
Yeah.
investors make a decision about what they think is going to happen based on some educated hypothesis and take an action
Mm-hmm.
based on that. And so, hey, if you think like when interest rates were low, yeah, while at that point property values was going to go up and up and up and up and up forever, which is if that's what God willed in the cards, that's okay. Like,
Mm-hmm.
hey, this is what it is. But we got a rocky road ahead of us.
Mm-hmm.
We got a rocky road ahead of us because still we got a lot of inflation to still pull back. Home prices are still crazy inflated. People are not making them. They're yanking snap talking about yanking section 8. What you think that's going to do to property values?
Yeah, I mean, I was never a big fan of the Section 8 only model. Of, rather it's in your private, whether single family or multifamily. But I do agree. If you're solely residential, you don't control the value. Once you switch over to a purely commercial property, you actually control the value, except for some variables like rates and stuff like insurance, whatever. But in
I'm
general,
I'm
if
not
you
I'm,
can,
I'm talking on a macro scale, not on a micro scale. If when if and when okay, so what we have done now is you have increased food security or decreased food security for millions of Americans through removing the SNAP program.
Mhm.
That now greatly increases crime in already crime-ridden areas. We're talking about taking away Section 8. I don't think it's going to end up happening because it's going to affect too many people that support that side of
Mhm.
the equation. If it does happen on a macro level, whether you got 10% Section 8 or 1% Section 8, it doesn't matter. It's going to greatly decrease property values because we're already seeing an issue with filling tenants in properties. There's already I know I got some people that got Section 8 properties and they can't find good tenants. So if the Section 8 people don't want to move in your properties or can't afford and they don't got it, like what do you think is going to happen?
Mhm. Yeah, I just to kind of tied to Section 8 thing, especially in Philly. I think they created their own kind of issue because in the past, Section 8 was really confined to certain neighborhoods because of what they paid. And so you were easily able to find a Section 8 tenant. Once they increased the amount of the Section 8 so much that it opened up to better neighborhoods, to newer properties. And so just like any other market, now they have more opportunities. It made it more difficult. So your old unfixed up property that you were easily able to rent out to Section 8 tenants, it's not going to fly. right? It's not going to work because they can take that same voucher and go to a better neighborhood and get a better a better property to live in. I don't think they're going to kill
Mortgage
Section 8.
goddess genius said, Gina. Hey, mortgage goddess Kiana. Sorry, I can't see. Hey, what's up, Kiana? How you doing? But if the economy is jacked, everyone is affected, whether you rent a Section 8 or not, whether residential. That's my point that I'm making, right? Like, so all of these things are being done that are affecting the economy on a macro scale that are going to affect home values. When home
Mhm,
values are affected, that affects landlords on top of the fact. Now, I'm going to talk about Philly
mhm.
specifically. They have made that place so pro tenant. And let me just be really, really clear. I am not, um, what's the phrase that I want to use? I am I'm not a pro Republican, pro Democrat. I'm just not. I never really got into that. I don't assign my values on a particular issue based on what the majority of people of one group of people think. Like I look at something on an individual basis. So I say all this to say that landlords are so disrespected as business owners in Philadelphia, and it's a shame because there is a housing crisis in Philadelphia. And so landlords are not considered business owners or not treated as such in Philadelphia. But at the same time, it just creates such a really bad dynamic for the stability of housing and the stability of property values and thus wealth in the city of Philadelphia. And you have to look at these things and make your investment decisions. And so for me, all my single families were in Philadelphia. And there's another thing that is not a place that I want to invest, where I want to park my money and rest my wealth building strategy
Mhm.
on.
Gotcha.
Um,
I tend to agree. I mean, Philly is certainly it's changed. It's crazy. Been in Philly. I'm not going to leave Philly because I'm just too heavily invested here to dump everything. But yes, it's certainly, I stopped investing the way that I used to. I was like, yo, I was very, very aggressive. And there is really um, no rationale that I can come up with to continue to put my energy into building up Philly. I do want to circle back to something that you said earlier about legislation change that made the LPGP fund process a little bit better. Can you speak about that a little bit?
so a couple things. First things first, some years ago, some years ago, I think it was Obama who put this in place, but it didn't go into effect until Trump. So he made it so that non-accredited investors can invest in, they can do crowdfunding. So that's awesome. That did affect things. Some say to a degree in a negative way, but it did affect things. Like non-accredited investors couldn't get access to some of these private equity vehicles in the past. But now, if you wanted to do a crowdfund, you could. Um, but what recently changed is now President Trump made some changes where you can now direct invest directly into for retirement accounts into alternative funds. The other thing that they did was they changed a rule with the SEC. Actually, I was just on the phone with my marketing guy. He helped me come up with this really good idea because there are a number of, I don't want to say loopholes, but so I'm gonna say opportunities where people everyday, sorry, where everyday people could get access to some of these sexier investments. And I want to we were talking about me making a marketing person was talking about me doing a course around teaching people how you can get access to some of this stuff that normally accredited investors only has access to. So accredited investors, for those of you who don't know, is someone who makes $250,000 per year, reasonably expects that they're going to make it the next year, and or has a net worth of $1 million or more, not including their residential home. Okay. So there are certain vehicles that give you really crazy, sexy returns that if that is not you, you can't get into. So, right, that makes it seem super exclusionary. But there are a couple things that you can do around that. One of them is you can get a securities license. Some of these securities licenses are relatively easy to get. Depends on how serious you are about your retirement and being an active investor as to whether you want to do it. The next thing that you can do, which goes back to answer your question, is they have this rule. It's kind of like what I've been calling it is a soft rule that says if you invest $200,000 or more into an asset, the government will look at you no matter what your income is or your net worth is, he will look at you as an accredited investor. Okay. Now, $200,000. Some of y'all don't have that. Some of you do have it in retirement. Y'all do. Y'all been working at your job for a long, long time. Y'all won't be looking at that 401k, but it's popping. Okay. So some of you do have it in retirement. You can absolutely invest your retirement income, your retirement assets into one of these vehicles. The other thing that you can do, talk to an accountant, talk to an attorney. I am neither. I am not even a financial advisor. Okay. I'm thinking about getting my 65 because I came up with this idea that we had a team meeting today and I forgot to talk to my members about. But I'm neither. Okay. There is this rule that says that, so let's say for instance, some of you are like, hey, I don't got 200,000, but like, what if I pull my money together with my homies and we can do it, right? That's probably where your brain went. And if you want to do this, I will usher you and you want to invest your money in our fund, let's do it. Okay. I will show you how to do it. So you can keep this asterisk. You can do that. You can pool your money into a investment LLC, right? So let's say 10 people with $20,000 each. Our fund minimum is 200,000. There are a lot of funds that have a minimum of 50,000 that do require accredited investors or 100,000. Okay, so whatever. You put your money into a LLC. Now, that LLC cannot invest in the thing that you're really after that's requiring from accredited investors. It cannot invest it if the sole purpose for that LLC existing is to invest in that asset. So let's say, for instance, I'll give you an example. Y'all, 10 people from Bragg decide that they want to invest in Invictus Elite, right? And you pool your money together and form an LLC. If that LLC exists for the sole purpose of investing in Invictus Elite, which is what our fund is called, you will get dinged. It's called like a pass-through rule. The SEC will say, y'all think y'all gagging us? We gonna pass this through. Oh, you not accredited, you not accredited, you not accredited. Everybody get in trouble, okay? But remember, it can't exist for the sole purpose of investing into the LLC. It can exist for the sole purpose of, investing into the fund. It can exist for the sole purpose of looking at other funds, looking at other investments. So as long as y'all are actively looking at other stuff, does that mean that, you could do most of it into our fund? You can do it somewhere else. It doesn't matter.
Mm-hmm.
And then that LLC will be considered accredited. You have to get verified and all that stuff. And or you do the $200,000 rule, which is where that $200,000, that's why our fund minimum is $200,000. Because a lot of times people get very nervous about getting verified as an accredited investor. So like, let's say for instance, our fund minimum is 100,000, but we do need accredited investors. Now you got to get verified. Now we need a letter from your attorney. We need a letter from this. We need a letter for that. People are not trying to do all that, but we can skip over that if they invest 200. So our minimum is $200,000.
So you're doing a lot of educating, even just in this conversation here. As part of your fund, do you educate folks? Because
Yes.
the most of the money, people think most of people's money is in their bank accounts. It's like, no, most money is in people's retirement account.
Right.
Is in retirement account. Period. There's so much more money sitting there. It's just generally speaking, most folks don't know how to utilize it to invest in something other than what their job set it up for and all that kind of stuff. So is that something where you already said yes? How does
Yeah.
that
So
work?
before I tell you, I'm gonna tell you three real quick stories. When we
Okay.
first started raising private capital for raising private capital for the fund, um, I had a conversation with someone who's accredited, but they've a very successful blue collar person, worked their way up, and they've been in the game for a long time at
Mhm.
a particular blue collar company. But now they're like a manager, they killing the game, okay? Making good money. And so the person said to me, hey, I really love y'all. Like we have a really good relationship. I trust y'all, but I don't know what you're talking about, right? Because we started talking about equity multiple, IRR, a lot of higher level finance terms.
Mhm.
And so that already stuck in the back of my head. Then he said, I want to put you on with my financial advisor. I already know how this is going to go. Because there's a conflict of interest for the financial advisor. The financial advisor only gets paid when you keep money with them.
Sure.
Okay. So like, let me just also say this. In retirement, right? We equate retirement to financial advisor or mutual funds and stocks and bonds, but there's probably like 20 other investments. You can invest in cattle. You can invest in commodities. You can invest in any type of livestock. You can invest in crypto. The government lets you invest in a lot of things in your retirement account, but you don't know how to do it. That money that they give you, that 401k, hey, we'll match that. You don't have to go with those whack ass Vanguard funds. I'm not gonna say whack. I used to work at Vanguard. It's an excellent company when I first started out, literally like 20 years ago. They the bomb.
Mhm.
They really, really are. It was a boring job. I absolutely hated the job, but they out here killing the game. They control all the wealth in the whole entire world. But that's a whole nother conversation in another day. Um, you don't have to invest in it. You can invest in promissory notes. You can loan someone money
Mhm.
to help them with their business
Mhm.
and keep it in your retirement. You can
Sure.
invest in so many things, okay?
Mhm.
So but financial advisors only get paid when you buy the stuff that's on their docket. So I knew that was going to be a problem. So I got on the phone with the financial advisor. And when I tell you, I don't want to go through this conversation. It was a very frustrating conversation because I could probably talk about this for an hour because I was so mad. He was asking me very silly questions. He immediately shut the investment down and said, the stock market is giving better returns. What do you mean? You don't know how to read this investor deck? The stock market at best gives, on average, not at best, on average, it gives 8-9% return. Maybe, it went up to like 14% last year, but that's an anomaly. It literally says on our documents that we are giving a 20% IRR. It says it on like page 3.
Mhm.
Okay. After hey, this is who we are. This is what we're investing. This is why we're great. Here's the number. And you don't know how to read that?
But do you think it's
Whether you believe it
possible
or
that
not
they
is
don't
one thing, but
understand
like
real
you don't know
estate?
how to really,
But do you
huh?
think it's possible they don't understand real estate? A lot of those folks,
No, it's
they
not about
think
them
they're
not
like
understanding real
classically
estate.
trained and they don't really understand real estate. They
It's
understand
not about
product.
them understand, not about them not understanding real estate. Let me finish. I'm gonna finish this story. I'm gonna tell you another story. Okay. So that's that conversation. Then I have another person who is a financial professional. They're not a financial advisor, but they work high level in financial retail services. Okay.
Mhm.
And they said, hey, I like this. This is awesome, but I don't understand it. So there's three people who are on paper qualified that don't understand not real estate. They don't understand basic finance terms and basic finance stuff. And these are people who would easily bypass this accredited stuff.
Mhm.
So what that says to me is people don't understand basic finance, regular everyday people. How else do I know that? All the people who feel like they got scammed, right? With some of the financial gurus, they didn't need to get scammed if they took the time to understand basic financial principles. And I've always taken this for granted with myself because again, I had my 7, my 66, my 55 since I got it when I was 22 years old. So I've been in this game. I'm 42 now. Been in this game of finance for 20 years. And I've always taken advantage of that or taken for granted for that and not thinking about A lot of people just don't, including financial advisors, they don't understand basic finance stuff, not real estate. It's not that he didn't understand real estate. He might not have, I don't know. But he didn't understand basic financial concepts. And I was originally upset. And then I sat back after talking to some of these people that I love. It's like, oh, the financial, and yet another way that the financial education system has completely failed us. They created these complex, unintuitive financial instruments, but don't teach people how to use it. And you're supposed to expect blindly that your financial advisor understands this stuff. And I'm going to tell you right now, I was hired as a financial advisor out of college with no problem. They don't care. The system does not care that your financial advisor don't understand basic stuff. They just trying to sell you products.
Yeah.
And so we started a community to answer your question. I started a new community. I did a soft launch. It's called the Profit Door. I am so proud of this community. I am so excited. And it's all about teaching people how to invest and raise private capital. Would I love for you to invest in my fund? Absolutely. Is that my main goal? No. I want you to be able to sit down with your financial advisor and probably educate him on a thing or two. I don't want this financial advisor to be telling you what to do and educating you, because chances are he's ignorant as well. Your financial advisor is literally just that, an advisor, not a complete administrator, not a complete lord over your money. You need to be able to understand this stuff as well so that you can make the best decision for your finances, for your wealth. And we hear about people that just live off their investments. Guess what? They're investing in this alternative stuff.
Mhm. And when you say alternative, what comes under the umbrella?
Alternative is something
Alter-
that's not the norm, like not normally stocks and bonds. That's pretty much what it means.
Okay, anything that's not stocks and bonds. One of the things that
Publicly, let me say publicly traded stocks and bonds.
okay. Well, one of the things that I found to your point, I don't think I think people are ignorant because that's the way that they want people is to not understand what their options are and to think that Wall Street is basically the only way that you can invest your money, right? Because if they were aware, most people would take more control over their investments, right? Doesn't mean that there's not a place for Wall Street. Of course, there is. There's a place for stocks and bonds, but like you said, there's a place for private lending. There's a place for funds for PPMs, and you should have some basic understanding of how that works, or you'll always be you will be at the mercy of your advisor. But you should have at least basic understanding of how these things work. And even if you don't understand the full
Here's the
thing.
thing. It's not. I don't. I want to make sure that we. I want to make sure I use the right language, because I think sometimes we get so judgy and say
Mhm,
you need to have this, you need to have that. The
mhm,
reality is people don't. They don't. They don't understand. If I say to you, if I had a conversation with somebody about like this financial advisor, IRR. What is IRR? Do you understand how cap rates work? Do you
mhm,
understand the time value of money? And 99% of the people on this conversation is going to say no. And that
mhm,
is okay. It is okay, because when you learned it in college, you didn't have context for it. So it wasn't important for you other than just to keep it in that temporary place in your brain to pass the test.
mhm,
That is okay. So I want to make sure that we don't use language like, you need to have this, you need to have that. Yeah, we should. I'm not saying we don't need to, but sometimes it comes off very judgy.
mhm,
It is okay. And a lot
mhm,
of times when some of this stuff is explained, and some of y'all get inspired, like, sorry, you get inspired and say, I'm gonna start watching Bloomberg TV and I'm gonna watch MSNBC every day. And then you do, and then guess what happens? It glazes over because you're like, what the heck are they talking about?
mhm,
And if there is no place a safe place for adults to come and get plain language education about some of
Mm-hmm.
this basic stuff, because we come at them saying, you need to understand this and you need to understand that and you should understand this and you should understand that. It is designed for you not to. Wall Street wants you to blindly give them the money.
Mm-hmm.
I'm
Oh,
not
yeah.
mad at them. It's a great strategy. I'm not mad at them. But
Mhm.
now that there is a safe space called the profit door, now there is a safe space for you to learn some of this stuff.
So
So
what
for
can they
instance,
so what can they expect to learn in the profit door? You mentioned a few times basic financial concepts. What would fall under something like that?
so before we do that, before we get into the basic financial concepts, there are some
Mm,
basic self-knowledge that we need to do. So when our members join, they get the immediate access to something called the 1% Boot Camp. It's a
mm,
three-part series where the first thing we go over private equity 101. Most people don't understand how private equity works or even funds work. They don't
mm,
understand it. Okay. So that class is so good. When I taught this class, and I'm not gonna lie to you, I taught it twice. After the second time I taught it, the people was on. I was like, I'm gonna have to get this recorded myself. Okay, it's so good. It makes it so simple for you to understand how funds work and how private equity is set up. Okay. Then the next thing is how I did a mindset shift. Most of y'all saw me do it. Well, for the past year, I haven't really been on social media, but a mindset shift, how to go from single family to apartment investing. And this mindset shift is less about single family to apartment investing. This mindset shift is about going from most of us, most people, the masses equate money to trading time for money, earned income. We know that, hey, they're like, we think about the cash flow quadrant. We know that, okay, people who are business owners, they trade, people resources for money. And then we
mm,
know that people who are investors, they trade money for money, right?
mm,
But we don't talk about how do you make the internal shift to regulate your nervous system to do it. This gap is why we know of the cash flow quadrant, but we don't jump from one square to another because you don't make the internal shift to regulate your nervous system. I'll give you an example. If you've been earning your money, trading time for money your whole entire life, and you're like, oh, I'm gonna go on this trip. I'm gonna do pull some overtime, right? Pull overtime, and that's this in your mind, like, okay, I want to do this, I want to do that, I'm gonna pull some overtime. Okay, let me add da, 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 da. And then if I just magically give you money and say you don't got to do that no more, and that's better, you will literally, your nervous system won't think that that new alternative is safe, so it will sabotage. So you have to regulate your nervous system and make an internal shift to go from whatever it is you're doing now to move to a different square in the quadrant. Okay. Hey, Alyssa. Um, I want you to be involved too. I'm gonna tell you in just a minute. Okay. Actually, you're a BTS member. I have a discount code for you. Okay. A deep discount code for you. So I'm gonna give you that in a minute. Um, what's up, Frank? What's up, Philly Real Estate Bowl? And then the third part is Finance 101 for alternative investing. That's when we roll our sleeves up and we go through all of the finance terms, how to pick a vehicle, how to analyze an investment, for real, analyze an investment, how to read a prospectus, how to read a investor deck. So actually that last class is three parts. I did the first part a couple weeks ago with our members of the Profit Door. It was really good. So now we're going to go into the weeds of a lot of those terms, things that I took for granted that I understood, that I just never thought about the fact that other people didn't understand either. So
mm,
within our community, they get access to the 1% beginners boot camp. They immediately get access to, so my partner Noel, he taught a class, he created a class. Over the summertime, we spent weeks working on this class, teaching people how to invest in apartments.
mm,
Teaching people how to invest in apartment buildings. It is 26 modules. It goes through the details on how to invest and analyze in apartment buildings. The
mm.
class is the bomb. Members get immediate access to that. You get access to my my baby of a class. It's called the God Goals and Money Income Accelerator. So we're talking about building wealth, but I think everybody needs to have a business on autopilot where your income is automated. So last year, I spent a whole entire year. Some of y'all know, and y'all wasn't paying me no attention. Y'all don't know I was doing all of this stuff and releasing this stuff so they can go into this program called the Profit Door. So I spent a whole entire year developing this program called the God Goals and Money Income Accelerator. It is 47 modules and 25 workbooks. If you don't want to do hard work, this ain't for you. This is for people who are very, very serious about getting their stuff situated. So you get immediate access to that. Then you also get access to, on Tuesday nights, we do an ironclad underwriting. We teach people, we actually underwrite deals every Tuesday. And then on every other Thursday for the Profit Door members, we have a different different person who specializes in the alternative investing space come and speak about alternative investing. So that's what our members get. And it's not even super expensive.
Mm-hmm. That's a lot of
I didn't even tell you everything. It's a lot
yeah.
of stuff. So what happens is, in order to keep people from being overwhelmed, what happens is, and this is why I've been, because I'm also building my staff back up. We
Mm-hmm.
got somebody coming on next week. I'm super excited, and two more people coming on. Like overly excited. But one of the things that people get when they first join is you get a call with me, and we go through what you got going on so that I can direct you to the right place and the right courses to take and the right um, trainings to take based on where you are. So literally, it's my whole wealth base knowledge, and then I got to find out where you at so I can point you in the right direction.
So who is the correct avatar of person to join the Profit Door?
The correct avatar. This is a good question. Me and my marketing guy, we just had a whole conversation about this.
Mm-hmm.
The answer that I want to give is anybody who has a project or real estate or a business that they want to scale by raising money, because that's another thing that we don't talk about is we always think about when small business owners need capital, we always immediately just go to business credit. You can raise private equity.
Yeah.
You can raise private capital, and no one's talking about that conversation. Also, too, the other thing that we do erroneously in the culture is we hold ourselves to these high standards that our business has to be in the black on day one. And we don't give ourselves enough grace that we actually do need a lot of capital to get this thing going. I'll give you an example. Do you know that they don't expect, what is it, OpenAI to be profitable for like 10 years, and it's already the most highest, biggest value company? They're not turning over a dollar of profit, and it's worth $5 trillion. So what does that mean? They're saying, hey, we're not going to be able to give no profit, but this is how much money we need. We need a lot of money. I can't remember how much money is invested in this company already. We need a lot of money to end up turning this profit over. And we don't hold ourselves to that same standard. We just think we got to just immediately go and start turning a profit tomorrow with very little startup capital or with crazy high debt.
No, that's
And you
definitely
don't have to do that.
yeah. That's very true. A lot of these companies like Google, Uber, I mean, they really want market share. So they come in and they're mostly their focus is we want to be the biggest share of the market. We want to be the person that you think of. I'm sure there's other, companies outside of Google, but you're going to Google first, right? And you get there by having capital and marketing, right? Marketing is a really big piece of this. I do want to I know we're at the top of the hour. Are there any particular projects that you guys are working on or that you've closed that you can that shows just what you guys are doing at the Invictus Fund?
So right now we have an 80 unit under contract. We're getting it for pennies on a dollar. It was valued at $10.1 million 3 years ago, and we're buying it for 2.2. There it's substantial capex, but we're getting it for pennies on the dollar, even with the capex. We have a really great system, which a lot of people don't have, for sourcing deals. That's one of our points of difference is
Mhm.
we find deals like nobody's business. I don't know any other fund, and we know a good amount of people who have real estate funds that can find deals the way that we do and at the numbers that we do. So we have a whole strategy, we have a system, a framework for finding deals. That's what we teach in the Profit Door. I worked with Arthur to come up with a framework that can be duplicated on finding deals. Um, so we have a 80 unit under contract right now, and we've got a whole bunch more on the docket. If you want to see some of our past deals that we have done, the team has done, you can go to invictuselitecapital.com. I will let me you know what? I'm gonna put it in my bio. By the time y'all get off of here, it'll be on my bio. But Invictus Elite, INVICTUS elitecapital.com, and you can see some of the examples of other deals that we've done on the Sunbelt area. And yeah, I mean, really, at the end of the day, it's all about exploiting our opportunity to find really great deals, which again, a lot of people can't do. And we're adding value by adding mental wellness amenities. We didn't talk about that. That
Yeah,
probably
yeah,
that's a whole nother hour.
yeah. We got
Um,
curious, but yeah, I know we're at the top. That sounds like a really. I'm curious how that plays into. I mean, can you? Is it something you can quickly?
but I can quickly talk about it. So, one of the issues that we have in this country is a mental wellness issue, right?
Mhm.
Um, and I believe that it is people's God-given right to have a safe space, something that is optimized for their mental wellness, especially right now in their home. Um, People who promote mental wellness within themselves and their surroundings actually plays the biggest impact on your mental wellness than anything. People who have a mental wellness routine or things that promote their mental wellness, they make better tenants make better employees, and better employees pay their rent on time and more, and more effectively, and they have lower turnover. So this is a huge industry. It's going to be a $900 billion industry, mental wellness. Right now we're focusing on AI, but mental wellness is a huge industry right now. There are actually Fannie Mae programs where we can also take advantage of, if our properties meet certain wellness certifications, that we can lower our costs as well. So it's a whole system to give our investors a better return.
Yeah, that's awesome. I like how it's obviously it's a good cause, but it also seems like it could also help the bottom line. So you're kind of hitting two positives at the same time. I love the way you guys are thinking. What I'm hearing ultimately on a very high level is thinking a little bit outside of the box, looking ahead towards the future, where most people are kind of stuck in the moment. So I'm super excited to see what you all do. I love how you're coming at it from a very holistic nature, meaning not just say, hey, give me your money, but let me also educate you on how this stuff is done. You were being very gracious on people getting scammed. I noticed you didn't call any names, but that's great. But you're absolutely right. There's a push to get people to invest who are not properly educated, and so they're easily fooled and like manipulated, unfortunately. So you're putting the whole process, like education, and then the opportunity if they want to invest. So as we close out, what's the how can everybody kind of find what you guys got going on, the upcoming events?
So I'm sorry about that. So, okay, couple things. If you're a BTS member, I know Alyssa's on here. and you want to join the Profit Door, I have a great opportunity for you. If you want to just join the Profit Door, you're already full with me. Go to theprofitdoor.com. You can, on that landing page, you can hit join. The price is going to go up. I did the same thing with BTS. We knew. I love my early adopters. I'm always going to reward you. Your price will be your price forever. That price is going to go up. You see how much value I spent 2.5 years creating all this content for y'all, because I didn't just want to put something out. People just put up a class and they'd be like, no, 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 no. You cannot deny this game. Okay. Also, too, I'm doing a webinar. If you still need more convincing, I'm doing a webinar. It ain't going to be the same price on a webinar. If you want to join right now, actually, if you join right now, I will waive the sign up fee. Just type in Dan. Give me 2 seconds to set up that code. Type in Dan, go to profitdoor.com, go to the join button. I'm gonna create the discount right now. Type in the code Dan and I'll waive the sign up fee. If you are I'm doing a webinar tonight. The discount ain't gonna be the same discount. Called the 7 Hidden Wealth Keys. And I go in a lot of the stuff that we're talking about. I go in depth. I'm going to tell you right now, the class is fire. You're going to get all type of game, but I'm going to upsell you to the Profit Door at the end. So if you want to just be like, you know what, I fool with Nicole. Let me put this discount in right now. Hold on. Hold on. She put the name down below. Hold on. Create discount. Dang. Um, yeah. That's how we doing it. I just put a discount in there. Go to theprofitdoor.com. You could put in /join and it'll take you there. Hopefully I answer your questions. Did I answer your questions then?
You answered the question. Yeah. So, yeah, like I said, I'm curious to see what you guys do. I think it sounds really good. I'm gonna look at some of these projects. See, I'm definitely interested in the mental wellness part of it. Are you still there, Nicole?
Yeah, I'm here. I'm
Oh,
here.
okay. You were sitting so still, I thought you got frozen again.
I'm
Uh,
sorry.
so yeah, I really appreciate your time. If there's any way that I can be of any assistance,
Okay.
definitely willing to, you know, help out where I can. I definitely, deal with you and Noel. I know a long time. Arthur, a little less so, but he's always been a solid guy. So
Is there
I'm looking.
anything I can do for you? Talk to me. Anything I can do for you?
Yeah, I mean, right now I'm really interested in what you guys are doing, and this is something because I think a lot of times we think we have to create things on our own, but it sounds like you guys have something there that could be of interest and a lot of value to my brag group as well. So I'm just interested in seeing what that looks like. You sound like you put a lot of time into it. And so why recreate the wheel when you guys already have it, right? So just sending people somewhere reputable that they can get this information and get some opportunities. But me, I'm good. I appreciate it.
Okay. If there's anything you can think of that you need from me, let me know. I'm here. It's the holiday spirit. I'm in a giving mood. What you need, for? What you need, for?
Well, you know what's kind of interesting when you're used, and I don't know if you experience this. I'm a giver by nature. It's sometimes it's hard when you're always given to think of what you need. At least I find it to be so.
No,
But I'm sure
no. Listen, let me tell you something. I had a mentor. You know who Ryan Boyer is? You gotta know who Ryan Boyer is.
that's the brother with the I don't know.
Um,
Is that the black guy with the gray hair? I don't know if you froze up on me.
I'm good. I'm good. I'm back. No,
As,
Ryan Boyer. Ryan
mm,
Boyer. No, it's helpful to new investors for sure, for sure. Miss
okay.
Rail.
Good
Yes,
enough. Good
she
enough.
put in a comment. Okay. Do me a favor, Miss Rail. Everybody who's interested in the Profit Door, DM me your email address. DM me your email address right now because I was fully not prepared. I had meetings back to back to back to back. I thought I was going to have enough time to prepare for this for Dan. I was not prepared, so I'm going to create a special discount for you. I'm trying to do it while we're on. It's not working. So let me just I'm give you the same advice that Ryan gave me. Okay.
Mm.
Ryan is he runs the labor unions in Philly. Google Ryan Boyer, okay, and you're gonna see that Ryan Boyer.
I'm looking at them. Yeah.
Okay, so you good. That's my big brother.
Mhm.
I met Ryan when I had my digital marketing agency. He was on the board of this nonprofit.
Mhm.
The person who ran the nonprofit knew one of my employees. He came down to the office and was like, this is amazing. A young sister is running this, and I had all black women working for me too. I had one white dude working for me. He's like, I cannot believe this. And so he took me up under his wing.
Mhm.
Shout out to Ryan Boyer. He is that dude, okay? And Ryan said to me years ago, he had hooked me up with a meeting with he was always hooking me up with meetings with politicians to execute what I need to execute. And he prepped me for the meeting and he said, don't ever go to a meeting with somebody and not have an ask. And
Mm.
that, as a person, when people come to meetings with me and don't have specific acts, I be bad. Like you wasting my time. You just want to sit here and breathe in my air. That this is silly. I want to help you. Be specific. What do you want? And so he said that to me, and I it reframed in my mind. So when people ask me, "What do I need from you?" This I always have it locked and loaded. Whatever I got going on, because I know I'm gonna bring value no matter what. I
Mhm.
know exactly. If we was on a call and you said, "Hey Nicole, what do you need from me?" I will be like, "I'm starting a new community and I would like access to your peeps." I'm raising 15 million. And who do you know? We are paying capital raises. I'm gonna send you an email right after this too because I got some opportunities for you. But we are paying capital. I know exactly. You ain't never gonna catch me. I don't know what I want. I know what I want.
No, that's a solid gem. Absolutely. Absolutely. I will be
So
ready. When we meet again, I will definitely have that thing ready.
okay, all right. Let me know. I'm gonna send you. I'm about to just do me a favor and text me. Make sure I got your email address. I'm sure I do, but text me and make sure I have it because I'm gonna send you an email right now.
Okay.
Okay.
Yep. I'll
All right.
send it to you via IG.
All right. Bye,
All right.
y'all. Love y'all.
Everybody have a great day. Bye bye.
Thank you.